Welcome everyone to the 10th StakeHound Ask Me Anything session. This is Albert Castellana, CEO of StakeHound, and I'll be here every week with a conversation with an industry leader to discuss the state of the industry, staking, and DeFi. StakeHound brings staking and DeFi together so that you no longer have to choose between earning from staking while securing your beloved networks or earning from participating in the booming DeFi applications. Thanks to StakeHound, you're going to be able to trade one-to-one representations of any staked proof-of-stake token on Uniswap or borrowing against them on tools like Aave or Cream. And today with us, we have Hugh Karp, who's the founder of Nexus Mutual. Thank you, Hugh, for joining us today.
Oh, great to be here. Thanks for having me on.
Absolutely. It's great to have you here. Nexus Mutual, for those who don't know, it's an automated discretionary mutual running on Ethereum. So essentially, it's like you'll tell us more about this essentially. But he's been in the industry, in the insurance industry for over 15 years, and has held a variety of roles in like primary and reinsurance companies. And yeah, I think that I really wanted you to join the show just to explain to our viewers like everything that essentially you're the guys that brought insurance into DeFi, right?
Yeah, I guess we were probably the first ones to kind of start covering smart contract risk, which is kind of the most obvious risk to everyone at the start. So that's kind of where we started. But I guess our vision is kind of much more wide than that. Definitely cover a whole bunch of risks within the crypto space more generally, but also then later on, once we've grown, get into the real world a bit more. But definitely very crypto native focused for now.
Yeah, I mean it's very much needed, I believe, right? Like it's surging in demand. Like we can see how there's a lot of demand for this type of product right now, and like you guys were the we're the ones to actually like bring it like the first, right? So like can you tell us a bit like how did you guys start the company? How did it all come about?
Yeah, I guess I've personally interested in the technology for ages. Went down the Bitcoin rabbit hole like many other people quite a while ago. Didn't really know what to do with it. But then when Ethereum came along, I guess it all clicked for me, and I felt like I could put my insurance expertise to play with the technology to kind of make a mutual work, because mutuals are just basically a group of people coming together and deciding what to do on a shared pool of money. And that's kind of like a DAO. It's very like crypto native. It's kind of fits really well together. So something really, really old in the, like it's millennia old. But now we have a new technology that can really just make it better and more slick and make it coordinate incentives across people really well. So anyway, so that's the general idea. And then we decided quite early on that we needed to tackle risks within the crypto industry, mainly because we felt like any new industry needs insurance to flourish. And the regular insurers weren't going to be coming anytime soon because it's way too complicated. They're too risk averse, and they don't have the knowledge to kind of get down to that yet. And so it had to be kind of built from a community ground up level. Anyway, so that's kind of how it started, and obviously starting with smart contract cover as our first product.
I mean, it makes a lot of sense, like seeing like the speed of this industry, right? With the speed of this industry, you need the industry itself to kind of propose this new type of products, I guess, because like you couldn't be expecting people outside like learning, oh, now there's yield farming and like this happens over the three months, right? Like boom, the whole thing is up there. Like how do we deal with this? Like you need to be really, really agile. So I'm very, very impressed by everything that you guys have been doing, like bringing so many different products from online. Like you were just telling me before that you just launched the custody cover, right? That's really, really impressive.
Yeah, so we released a new product yesterday, which is interesting because we're covering like custody providers, so like CeFi providers really, so the likes of Celsius or Nexo or BlockFi, etc. To start with, and then centralized exchanges and others in the future. And I think that's really interesting because, one, we see that there's massive demand for it, but two, like the regular insurance companies can't provide it. But now we're providing a solution from within DeFi, actually going out into CeFi. And so I think it's kind of it's a great product. We believe there's going to be a lot of demand for, but it's also a demonstration of what Nexus can do more broadly and how flexible it can be. That's just kind of our first step into our next product. And As I'm sure we'll get into, there's going to be more products coming up that can cover things like staking and stuff like that. So that we're really interested and keen for obviously the staking industry to, especially on Ethereum, to kickstart soon, as it's obviously just kicking off now, right?
Yes, exactly. Yeah, just starting now. No, but like it's impressive how like the speed at which you've been like using this is amazing. So can you tell us, like, for the people that don't know, like how does Nexus Mutual work?
Yep. So basically, it is like a DAO in a lot of ways. Basically, you sign up to become a member, and then people pool their funds together. So some people are simply buying cover on a particular smart contract right now. So maybe they buy cover on Compound or Aave or Uniswap or something like that. And so they pay their contribution to get cover for a year or 3 months or whatever period they would like. And then if there's a hack or an event, then they submit a claim, and other members of the mutual can vote to decide if that's a valid claim or not. And so we've had quite a few votes and things like that. We've paid out some claims, and so that's basically how it works. And so you can kind of do lots of different roles within the mutual, and you can do any or all of these, but you can, I guess the most basic is you can be a end kind of customer where you buy cover, which is basically like buying insurance, but very, very similar. Then another role would be more like a capital provider where you're just backing the whole mutual more broadly. And then a kind of step deeper is being a risk assessor or a staker within our system, which is kind of saying, I think you're going to buy our native token. So you put some ETH into the pool and you get our native token NXM in return. And then you can optionally decide if you want to back a specific smart contract. So like Compound or Maker or Uniswap.
Right.
Yes, I think that's secure. And the more people that do that, the lower the price of cover and the more cover we can offer on that particular smart contract. So, and that's the way it's going to work for all types of risks. So we need a really solid staking network to kind of bootstrap new markets and stuff like that. And they kind of signal, it's kind of using the wisdom of the crowd's philosophy of prediction markets. So put your money where your mouth is. We think this particular risk is good, or we don't think it's as good. And so the price goes up or down depending on that process. So we don't actually set the prices as a whole. We let the members of the DAO of the mutual set the prices as on an aggregate basis.
So it's essentially just the market, right? Like there's no calculation of the cost. I mean, do you suggest what you believe that the cost should be, or like they just completely come up with it and then they see if they want to put money on it?
It's somewhere between. It's a bit more structured. So we have a formula which basically says, based on this much staking, this is what the price is. And so then the staking levels move. So it's in some ways, it's kind of like the interest rate markets in Compound or Aave. Based on the borrowing and lending ratios, the interest rates move up or down. Right. So it's very similar in concept to that.
Understood. Okay. Why did you take the decision to go with ETH instead of like a stablecoin, for example?
So ETH is money, right?
For sure. No, just curious, right? Like I'm sure a lot of people are thinking like, oh, but ETH is volatile, right? Like it, yeah.
So no, it's a good point. So one of the important things for an insurance-like entity like us is that if you write risks in a particular currency, whether that's ETH or stablecoins, that you also have assets that are backing those sort of a similar. So you're kind of matched from an asset liability point of view. Sure. And so right now we're actually writing like 70% of our risks in ETH base. So we need to kind of have a large chunk of ETH. We're overweight ETH right now. And as time goes by, we'll probably reallocate into more stable coins. But it's important that as we grow bigger in particular, that we get those matched. But we are writing a significant amount of risk in ETH base, so we need ETH to pay out potential claims.
Makes sense. So, like, what are the, like, from what you've seen so far? Like you've said, you've already seen some claims, some payouts. Like, what have you been like the learnings that you've had so far on this? Like, how effective is it?
Yeah, I mean, to me, I'm really happy with how it's going, to be honest. Like we were doing a lot of new things when we launched this. And we may not have got everything perfect. I didn't never expect that we would. And we're definitely like iterating on the core mechanics to fine tune them, to get them balanced right and all the rest of it. But I think the core structure of what we're doing is right. And so now we're more like, I'm really happy with that, because that means we're more in the iterative fine tuning stage rather than, oh, hold on a minute, we have to go back to square one. So,
right.
I think that's really good. A lot of people will go, well, oh, you've got claims assessors to vote on things, and therefore that's not trustless, etc. You should have like an oracle, etc. And there's definitely debates on those types of things. I do really like the claims voting, because it gives us like infinite flexibility on what products we can offer, rather than having to have a data feed to determine claims, etc. So there's pros and cons with all of this stuff, but I'm really happy with the overall structures. It's now a matter of, as I said, fine tuning, getting the incentive mechanisms exactly right, and then scaling this thing pretty large. That's the goal.
Yeah, absolutely. I mean, it's such a quick evolving industry that like you need to remain adaptable, right? Like you need to remain flexible, and like you need to be able to adapt to whatever is happening, and just like who knows what's going to happen. So using a market approach, it doesn't make a lot of sense to me, right? And like how is it for the people that are providing the liquidity? Like when do they get kind of the payout?
Yeah, so we basically have one pool that all of the funds go into. And so to the extent that there's surplus left over, so premiums less claims, that's kind of just jointly owned by the members of the mutual.
Okay.
And we do have a bonding curve approach. And so to the extent that no one contributes, so just say we're in a steady state where no one's contributing or taking money out of the pool, and we're generating surplus, then the bonding curve price goes up. So that's basically the mechanism that we're working with. And so the idea being that when that happens and we generate surplus and we have excess funds that we don't need to back covers, then we encourage people to take money out by pushing the price high, by burning the NXM. And conversely, if there are a few large claims or something and funding levels get lower, then the price goes down to encourage people to put more money in to recapitalize the pool. So it's we have a very specific mechanic to do that and to benefit the members, but it's primarily focused on making sure that the mutual has the right amount of money to back the covers that it's written. So I think it's actually quite I guess that's one of the more unique things about what we're doing, because I don't think a lot of other projects have stuff like that. It's been working quite well so far. So.
Yeah. I mean, there's a couple. There's a lot of things that are interesting about the project. One to me that I kind of mentioned the other day was like the NXM, and that like you've got the W
the wrap
token,
version,
right? The wrap version, right? Like how did that come about?
Yeah, so I guess one of the other things we're doing that's a bit more new is we actually we're linking this DAO to a legal entity in the UK, and so there is a KYC process to enter, and you become a member. You become a member of this club in the UK. So you become a member of this real legal entity, and so therefore our NXM token's only tradable within the membership base. It can't be traded outside, and that's enforced by the smart contracts. And so, because that restricts us some ways, one of our members decided to create a wrapper contract that wraps NXM and turns it into wrapped NXM. And therefore, wrapped NXM can't actually do anything within the Nexus system, but it's a fully tradable ERC20. And so, it's on Uniswap and Balancer, and exchanges are offering trading and stuff like that. And I thought, one thing I found really interesting with this was, one, it was community driven, which was great.
That's right.
The second was, it doesn't actually matter what restrictions you put on in terms of in the code, you can work around them with a smart contract. I thought that was a good theoretical learning that I'm sure will become more prevalent in the space as we grow.
For sure. So where do you see yourself going to? Like, I know that you guys are creating a lot of different kind of insurances, and like how do you see Nexus growing to?
Yeah, so I mean, our main shorter term, medium term goals are one, like keep iterating on these core mechanics, make sure we really get them right, and then at the same time growing out distribution and products within the crypto space, because we
Mm,
just see that there's so much opportunity. Like DeFi is really growing, crypto is growing more broadly, more adoption's happening, and there's so much risk that's uncovered or uninsured right now. And
mm,
so I see there's a massive opportunity there, and that's likely where we're going to stay for a couple of years. But then I think what really brought me to the space was just building products for underserved markets. And like crypto is a key underserved market that
mm,
we're obviously focused on to start with, but there are a whole bunch of others out there. And so what we're building is a platform that anyone can build a product on in the future and distribute it to their market that they know something about. So we don't
mm,
have to be experts in it. And I guess one of my go-to examples is like marijuana growers in Canada. They can't get basic financial services, even though they're a massive industry, because there's reputation risk, and the financial services
yes.
doesn't want to provide it.
Mm,
But they have a big need to kind of cover crops and a whole bunch of other things. And so, that's just one example of where a permissionless community-driven approach can add massive value and protect people where they can't get stuff right now. And so that's the type of thing we're going to be looking at and looking for partners to help develop that type of stuff with.
mm. I'm sure you're gonna get a lot of queries for sure. There's a lot of underserved markets, and like what you guys are saying is very versatile. That's the key thing, I think, right?
Yep.
Like you can build insurance on pretty much anything as long as the DAO agrees that they want to be insuring that specific thing and that they can calculate what it's worth. So yeah. So, like, obviously, like if we go more into the staking business, right? What do you think about ETH 2.0? Like, how have you seen like all this new staking wave that's coming, right? Like, staking has been around for a long time, like since 2014, essentially 13, 14, and like, but no one was talking about this. Now everyone is talking about this. How do you see all of it happening?
Yeah, I mean, I'm really excited for the ETH 2.0 launch in general. Obviously, it comes in phases, and this is just the first part. But it's a big part, and it shows that the Ethereum community kind of can get there in the end, which is great.
Uh,
So yeah, I mean, I think it's the first step. It obviously doesn't do much by itself right now, except for obviously provide an access to earn returns on your ETH, which is pretty hard to come by.
right.
And that's substantial, obviously, from that point of view. But I mean, in terms of technically, it doesn't actually give us anything major from a fundamental chain point of view at this stage. Hopefully, next year and the year following, that's gonna be a big change. But it's a real big signal that the vision of Ethereum can be realized. And so I think that's really really critical, and I see, it's laying the foundations for stuff which is great. But I guess financially, which is a lot of people in this space are obviously interested in, it's a big opportunity to put that ETH to work within like earning yield, not just in DeFi, but the native returns. And I think it'll be a bit of a game changer for ETH, the asset, overall.
No, absolutely. It's gonna be a game changer. I mean, like as you know, we're right now about to launch the ST-ETH, right? Which is gonna be, the way so that I mean, I'm very excited about some of the things that you're gonna be able to do with that. Such as, for example, being able to provide liquidity on a pool with ST-ETH versus ETH, right? And then essentially we'd have one of the sides of the pool that's generating rewards. Then the fees of the trading on that pool will be generating rewards as well. No impermanent loss, which is a massive problem in the space as well, right? All of those things are really, really, really powerful. But if we don't have a way that we can ensure that that the balance keeps maintained in a way, then it's going to be not possible for some people to be able to participate, right? How do you see all this? Like I know that we've been discussing this for quite a bit. So
yeah, I think there's a couple of things here. One that this is going to show the composability benefits of Ethereum. Like it's just another examal of how you can
absolutely.
just, you can just add one extra piece. It's like here's one extra Lego piece, and now I can build a whole fire station or whatever, right? But I couldn't do that before, but now I can. So that kind of the analogy fits really well as soon as we get more and more pieces. But I guess kind of going back to the risks. staking, especially in phase 0, has some in my mind, some unique risks that maybe aren't apparent to a lot of people. And I guess obviously you have to kind of run your validator. You have to make sure that you've got uptime so you don't get penalized. You got to make sure you don't do something silly so that you don't get slashed. So there's kind of a difference between being like penalized for uptime and then slashing for doing something wrong. And then there's all those types of things. So you got to have your tech capability. But I guess one of the most interesting ones is obviously the lockup period. So if you put your 32 ETH in to create a node and validator, then you effectively locked, and you can't get that ETH back until phase 1.5, which, 2 years away,
a couple
maybe.
Years from now.
So basically, there's this long lead time. And one quirk on that if you actually do something wrong and suffer a slashing event, then you get the slashing penalty, but you also get kicked out, and you can't be a validator. And you can't get back in, and you can't take your ETH out until 2 years later. So there's a kind of a few like extra little subtleties in here that maybe people don't fully realize. And so I know what you guys are doing, and I guess other groups doing it as well. But creating the validator service, so basically delegated validation. You can send your ETH to StakeHound, and they'll start validating for you on your behalf. You're essentially trusting you guys to do that process, which makes a lot of sense for a lot of people. But it's kind of like a custodial service, because you guys have to look after the withdrawal keys, etc. So there's trust involved, but there's a huge benefit that you can do it on a tradable basis, and you can trade out because you've got a tradable token, which kind of takes away the 2-year lockup stuff. So I guess the point being that there's a whole ecosystem going to emerge here, and depending on which solution individuals go for, they're going to have a different risk profile and stuff like that. And then our aim as Nexus is going to be coming in and kind of covering those, hopefully on a package type basis, so you don't really have to think too hard about it. You just kind of know, oh yeah, I'm covered if something really weird happens that I don't really understand. And so that's anyway, that's our goal, and we're kind of in the process of developing products that can natively cover this stuff quite easily. So yeah, that's a bit of a ramble, but that's a lot of the stuff that we've been thinking about.
No, there's a lot, right? Like all these different liquid staking tokens, right? Every single one of them is going to have a completely different approach and a completely different setup. We shouldn't be assuming that they will all be worth the same, right? It just doesn't make any sense. Like they will have different risks, for example, right? Like the way that we're managing the nodes, the way that we're managing the keys, all of this is completely different between ones and the others. And I'm interested to see what's going to happen with so much fragmentation, and at the same time with so much different, vastly different approaches that can have so very different effects, right? So I think what you propose, I mean, maybe you can tell a little bit more about what the what the product would look like in this case, right? So I've got, say, 100 ST ETH, right? How would I be able to get insurance for that ST? How we would see that happening?
Yeah, so we're basically developing a product that's going to allow you to at any point swap your ST ETH for actual ETH at some haircut level. So for example, if ST ETH depegs by more than 10%, then you can just swap it with the mutual for ETH, actual ETH. And that way, what happens is there should be a reference, like a face value of that ST, that it should, if everything's going fine, it should be 1-to-1 with ETH or something like that, right? And then, but if something happens, whether that's the custody fails or the nodes get slashing risks that accumulate up too high or something like that, then the ST ETH may depeg from ETH. And then if it depegs far enough and you take a decent amount of losses, then that's when you can kind of make a claim payment just by swapping. And so it doesn't really matter what those risks are. you don't really have to worry about them. It's just that it's all kind of encompassing. So, it doesn't really matter why it depegged. As long as it did depeg, then the market reflects that something it did happen, that it's no longer worth that. And so that's going to be the crux of the design. And so you'll always be able to get back to genuine ETH, and that'll be the way to do it.
Yeah, it isn't like back again to, I guess, like the making it not through an oracle, so that people can just like move the price down to just create some problems around, but actually just like there would be like a process to make sure that that's a correct claim. And like what would be the pricing looking like, you think? I mean, I understand that this depends on the community 100%, but like what would you expecting it to kind of in what range?
Yeah, so I mean, our minimum prices are somewhere around 2.6%. So this, it obviously depends on the particular solution and how many stakers on Nexus want to back this solution versus that solution versus another one. But we'd expect these, if there's sufficient demand, which we expect there to be, then the staking should come down to like 3% or something like that. Which gives you a good balance between, you can choose, do you want to get higher rewards with a higher risk, or do you want the lower risk,
right,
lower rewards option? Some people will take one, some people will take the other, but that's the kind of the option. So
just creating optionalities for the people, right? Like that's the thing. Like if you can just by holding the STEs be getting whatever, say 10%, depends on how many people are staking, and then the insurance for it costs you say 3%. It just makes a lot of sense, right? On top of this, you can be providing liquidity, but then you probably already has as well like insurance for people providing liquidity as well, which is another layer of insurance that you can get in there, right? The whole thing really like can compound and can create a lot more security for the users that are actually just trying to make more money from their money, right? So
yeah, exactly, and I guess that's what we're trying to do. More flexibility, give people options, and hopefully it'll create those bundled products that kind of sit very neatly together. And I think this is one of them. When there's a return on the table, but you're not sure of the risks and you can get the downside covered, it makes people a lot more comfortable.
Yeah, absolutely. So what are the other big risks that you see in the industry?
Yeah, quite a few, I guess, but I guess that's my job. There's obviously the smart contract risk, there's oracle risks. I guess some of the more interesting ones is probably kind of worth getting into a little bit, maybe governance attacks. Something that we actually haven't seen really yet. There's a couple, but not really have been executed. But like something like that could happen. I actually really, not that I want it to happen, but I'm kind of really interested to see how resilient these systems are to something like that occurring. And I guess more broadly, like perhaps not something Nexus would cover, but like the regulatory risk of clampdowns and stuff happening is obviously something happened this morning with a bill being put up as one kind of example there. And then I guess then there are things that are like Tether or USDC, which the whole industry relies on quite heavily right now. If they were to have a serious issue, then that could cause challenges throughout the wider ecosystem.
Yeah, it would have a big impact for sure, right? So, is there any like kind of more personal level, like, is there anything that really excites you about like the developments that are happening right now in crypto? Like, yeah, is there anything like you find like this is awesome?
Yeah, I mean, I think honestly, it's just the speed. Like, the thing that gets me is like it takes you 2 years at least to develop a new financial product in the regular world, but they're kind of like 10 are coming out every week in DeFi. I don't know, but that's what it feels like, right? So it just feels like the speed of experimentation is insane. And I think more generally, I feel like what we're doing right now is rebuilding stuff that we know. So we're taking traditional finance and we're kind of rebuilding it, which is great. And I think that's the first step. But I think what really kind of fascinates me is what other things we could come up with in the future. Like we just don't know, but now we have, it's like, the internet brought us a whole bunch of things that we never expected we would have had.
Yeah.
But it started with the basics first. We're just replicating things we know about.
Yes.
And so I don't know what those are. I don't know what those examples are, but that's the type of thing that's potentially really exciting that people are going to come up with, I'm sure.
I really enjoy like when they do like these DeFi hackathons, right? They just come up with whatever 50 ideas, like, and just like build the products in a matter of a day or two, right? And just like showcase them to the users, get great user base, great communities, create their mini societies in each one of them, right? And then there's the composability about all these Lego pieces that are being built right now, right? And it's really, really impressive. And like you said before, like it's very underserved still. Like I'm surprised that there's not probably like 10 times more developers building in this, because like it's been quite a while now. It's not a new industry, like it's 10 12 years already, right? But yeah, like the speed is ridiculous, and I can't even imagine how ridiculous it's gonna go when there are 10 times more developers than there are right now. Yeah, it's super exciting. It's an amazing place to be kind of building something in, for sure.
Yeah, the energy around the space is really growing right now. I mean, it's obviously market sentiment a little bit, but still, like the growing number of people involved is just it's going to compound, and we're going to end up with things that are amazing. We're going to look back in a few years' time, and it's going to be one of those things you go, oh, I was there at the time at the start. So yeah,
exactly. No, that's the thing. It's really the beginning of great things, right? Like I'm sure Nexus Mutual in 5 years, something like this, it's going to be a massive entity. And having had this conversation with you is a pleasure, right? Massive pleasure, because I know that it's going to go there. It's just a matter of time right now, right? And it's just like being able to share these conversations with you. Like that's why I'm so keen and so happy about being able to do this. So thank you very much for joining us today. Is there something that you'd like to kind of one last message to the community, or like to your community, our community, like?
Yeah, no. Thanks for having us on. I think if you're interested in Nexus and interested in learning about staking and staking risk and stuff, like just come and jump into our Discord and find us on Twitter at Nexus Mutual, and then go from there. And we're very open community and happy to answer any questions. So yeah, just come and talk.
Great. Thank you, Hugh, for being here with us today. It's been a pleasure. I hope we can have you some other time when we start like creating some of these partnerships and like products together. I'm really looking forward to that. And well, for everyone that's viewing this, just feel free to subscribe and join the channels as well. Like this video, share it with your friends, and well, like we will be soon launching. Next week we're going to be launching the staked ETH and the staked ZEM tokens, which we're really excited about. and yeah, we just we invite anyone to ask for questions on the channels, and like just participate, try it out. It's a completely new thing. Opportunities, like we're just getting started, right? So a lot of things that will happen. Well, thank you everyone for viewing us, and thank you, Hugh, for being here today.
Cool. Thanks everyone. Yeah, great to be here. Cheers. Bye.
See you soon. Bye.